Alright everyone, here we are with another video with Invest for Tomorrow. And to all the first time viewers and investors, welcome to the channel, and to all the subscribers, welcome back. All I ask for in return is for you to smash that like button to let me know you watched this video, that you found the information helpful and informative, and it helps out the YouTube channel. It's very much appreciated. And stay tuned towards the end because I have a ticker symbol for you guys that you won't want to miss, and you definitely want to add to your watch list, especially as it's going down. And it's not a penny stock like this one. It has a lot more traction, and it's part of the EV sector. So stay tuned for all that information. So, CTRM. I'm starting to get a little bit more on the worrisome side because we saw this go to 65 cents one time. But if we get back to that point, I don't think it's going to bounce back nicely like it bounced back here. It might try to, but it won't do much. The fire is starting to get turned off. I've always said it. If CTRM was to stay above $1, we would see some strength, and if it can't do that, it's going to lose any fire, any traction that it really had. If it stayed above $1 and pushed upwards, we could be on our way up to $3. I've said that multiple times because this is a profitable business, right? Year over year. 2020 was probably their worst year, but 2021, 2022, moving forward, and the expansion of their fleets, more opportunities, right? Well, CTRM is heading downwards, and we're getting closer to that 65 mark. If that gets broken through, I could see this stock anywhere between 25 cents to 40 cents. I'm going to be real honest with you guys. I could be completely wrong, but that's what I'm seeing if we break through this, okay? That's why today, this is just a chart analysis. I'm not here to go ahead and say, oh, well, there's an opportunity. I'm not seeing it, especially below $1. This was close to $1. I was hopeful, and we're going back down. And yeah, it could touch down here, or it could touch a bottom here and bounce right back up. But again, I need you guys to remember, this needs to stay above $1. If it can't do that for an extended period of time, and when I say extended, I mean weeks and months, then CTRM is losing its fire, and it's going to end up at some point 25 to 45 cents down there in those lows. Why? Because that's what the book to value is on this stock. The reason why the book to value is at that level is because it still hasn't even created that profitability and that type of revenue that we're expecting. So when you're investing for the future, right? You're investing for future earnings, future opportunities. They're expanding their fleet. So I could see this stock run up. I could see it, but it needs to stay above $1. There's no strength there. This doesn't stay above $1, there's no strength. And we're going downwards and downwards. If we get closer to 65 cents, 64 cents, I'd watch this very carefully. But if that gets broken through, it could possibly hit a newer low and create a bottom and run back up. But if it gets rejected at the $1 mark, this will eventually be a 25 to 45 cent stock. If it doesn't get driven by investors. And when I say investors, retail investors just loading up the boat to push it up like it ran up here, right? That's not the growth I was expecting from this company. I was expecting a healthy growth of some type of consolidation, staying above $1 or nibbling at 95 cents, finally start to work its way up. And let's go ahead and draw this a little bit shorter so you can kind of see what I was expecting. I was expecting to kind of sit at $1, come back down, go at $1, and then all of a sudden start to rise and start to work its way up like a natural, healthy, growing stock, reaching all the way up to anywhere between $2 to $3, consolidating there, possibly going to $3 to $5. I personally saw that, but the weaker this is getting, now the overall market hasn't even pulled back completely, right? If we're in the middle of another pullback, we're just getting started. We saw how big of a pullback we went through before. So if we keep pulling back, that means that CTRM and every penny stock that you can think of has a lot more room to pull back, because that was the previous pullback. We ran up. They brought themselves up a little bit higher, right? You could see from 65 to $1, and now we're pulling back again. So if it could stay above 65 cents, there might be some strength here for it to bounce back and probably get back to $1, and then it needs to prove itself and then do that growth. But if we break through 65, I'd watch this very, very carefully. Okay, I do want every single investor and viewer to be aware of that. And it is a penny stock. Penny stocks are very risky, high volatility, and they are unpredictable, especially even if you do fundamentals like I'm doing right now. Tomorrow, this thing can just run up because of high volume, because since they're so cheap, the volume is easily accomplished by so many retail investors taking a shot at it. So that's something to always remember. Like, it's so unpredictable. But there is one thing that you can go ahead and see, and it's the support levels. And if the support level gets broken through, we might end up somewhere between this area here and even down here of 20 cents to 45 cents. And that is pretty much a scary thought. But the funny thing is that it could probably stay around that area for a while until it just takes, retail investors to load up all together at once and bring it back up. That can possibly be another unpredictable event, but that's not what you're supposed to be waiting for. You want to be, looking for stocks that have potential to grow. This is a growing company, but it's not growing fast enough to keep itself up above $1. And that's where I'm starting to get a little concerned. And that's what I wanted to go ahead and share with you guys. I look forward to seeing your guys' thoughts. I know a lot of you guys are bullish, but 65 cents is like the key number right now that we need to watch. So the 50-day moving average is 86 cents. Anything below it is bearish. Anything above it is bullish. Now our support here, 77 cents. If that gets broken through, this could be on its way down to newer lows, new support levels, and getting deeper into bearish territory. Super, super important to keep that in mind and watch this carefully. And then obviously your next point of reference is 65 cents to 77 to see if the bulls try to reappear and bring it back up, or are the bears tearing this one down. Now, on the other hand, we have what the bulls want, what they need, and what they actually have to accomplish to just build some momentum. This doesn't mean that they've gained control. And that's the resistance level at 81 cents. I'd round that up, right, to the hundreds and thousands place. 81 cents needs to be turned into a support so the bulls can pull upwards, reach newer highs. Their next resistance is up here at 83 cents. And then obviously way up here at 86 cents being the 50-day moving average to get back into bullish territory and build some leverage and momentum, right? But before getting there, 81 cents needs to be accomplished and broken through. This is just an indicator for us investors to know where the stock is going, but does not signify or guarantee that the bulls have gained control. As always, guys, thank you guys so much for watching. If you found this helpful and informative and you're a first-time viewer, hit that subscribe button. Don't forget to click on the bell to not miss a single video that I post. And to all the investors and viewers, smash that like button to let me know you watch this video. It helps out the YouTube channel, and share this with your friends and community. Stay tuned for the ticker symbol I'm about to share with you guys towards the end of this video. All right, everyone, here we are with another video with Invest for Tomorrow. To all the first-time viewers and investors, welcome to the channel, and to all the subscribers, welcome back. All I ask for in return is for you to smash that like button to let me know you watch this video. Stay tuned on in because we got a lot to cover, and let's talk about how this is speculative but also an opportunity. So the first thing is I have neo.com pulled up. Definitely go check out the website so you can see more about their product and the opportunity that lies with this company. So let's go ahead and see their chart. And their highest was almost $67 at some point, and their lows recently were 31, and we're sitting at 37. So I mentioned this one over at the Patreon earlier today, and I blocked out the other two stocks because it's only fair for the Patreons. So if you're interested in knowing live updates weekly, what stocks I'm watching, and throughout the week as opportunities like this one present themselves, you can join us and join me over at the Patreon to know more about it. But let's go ahead and read this. So speculative stocks, but some interesting ones to watch. The reason why I said speculative, because there's some tensions right now with Chinese and U.S. relations, which we went through that last year. I went ahead and talked about, I don't know if you remember last year's tensions, quote unquote, but the delisting and the auditing and the 3 years till they're going ahead and get delisted or whatever it was the case be, it was hitting these stocks. Now they are speculative because these tensions, quote unquote, could actually hurt the stocks. If these tensions get worse or more serious, it could hurt the stocks short term. When I say short term, the rest of the year, the next coming months, or the next 2 years until things kind of loosen up or get a little bit better. But if they're temporary pullbacks that last a few weeks or days, these are opportunities before us. So I went ahead and said it. NIO is called the Tesla of China, and NIO operates in China's premium electric vehicle market. Like, this is the top of the line when it comes to EVs in China. They have a following, which their business models is impressive. And what I mean by that, they have a following, they have a cult-like following, and they're doing a really good job with their business model of making people have to come back to them for a battery swap. That's like impressive, okay? They're the only ones mastering this and taking advantage of this in their sector. It is sitting close to $37 and has hit a high of $67. So let's go ahead and go over here to see the article, and I'm going to go ahead and kind of break it down. So there's like a $30 difference right now, right? And I'm going to break down those $30. Hypothetically speaking, I'm not a financial advisor, and I am not here to tell you guys to buy, sell, or hold any positions, but I am here to enlighten you guys and open your perspective to something you may have overlooked or not understood or seen before. So this article talks about every reason why NIO is volatile and it's stumbling again today. So let's look at the three main reasons. The first one, treasury yields. That's temporary. That's happening to the whole market. This is not just NIO. China-US relations. This could be temporary. This is what's making it very speculative right now. And the third thing is chip shortages. Okay? Chip shortages are not that big of a deal. This is temporary. This is going to get passed over. It's hurt the entire auto sector. So out of these three situations, two of them is happening universally in the market, and this one's universally in the entire auto sector. So chip shortages, we can get past. Treasury yields, we can get past. Now, for Chinese EV maker NIO, that's certainly not bullish for the company's American expansion plans. Add in broad delisting concerns and things are tense. This is all fear, right? Based off of this right here. So what is being said here? China and U.S. relations have taken a beating in recent days. U.S. and Chinese senior officials met for the first time last week under President Joe Biden, and conversations were less than friendly. Indeed, there's a lot of baggage here between the two countries. President Donald Trump's trade war and Biden's Buy America stance have made Chinese and U.S. trade headwinds. Once again, the talk of the town among EV investors. Okay, so when this is going on, this lets you know that you want to focus on U.S. EV, right? And something that a lot of investors didn't have was like a Tesla competitor within the U.S. market. Now, CCIV has came into the picture. Whether CCIV is good enough or not good enough, I think a lot of investors are going to feel more comfortable with the Buy America stance, right, than focusing on Chinese. That's why Chinese is speculative right now. But if I was to break down the $30 that we're losing here, and all of this was to hopefully recover and one or the other would damage it, this is temporary for sure. This is temporary for sure. And these two right here account for $20 that we've probably lost here. So this can jump back up to 57. Okay. Now what's going to hurt it the most to get back up to those highs, and this is hypothetically speaking, I just want you guys to open your perspective on how much this has been pulled down by a temporary setback. So there's about $20 right now that are missing by a temporary setback. Now this is the most important $10, and these $10 could actually cost the stock the whole entire $30 or even more, or worst case scenario, delisting concerns. And this is where the fear comes in, and you need to rationalize as an investor what's really going on. So this had the issue with the delisting, and they talked about it last year. It's going to take 3 years before they're audited or they have to prove themselves and so forth. Now, could these get delisted right away? I'm not sure if they can do an executive order or something like that, but there's tension. But you want to remember, last year's tensions were temporary. This year's tensions, if they're temporary, this is opportunity. If they last, then you need to rethink everything and watch it closely. That's what I'm saying. You want to add this to your watch list now. I don't want you guys to miss out on it. It's time sensitive, and the sooner you know, the more aware you are. But the whole issue is that a lot of investors, they love NEO, and NEO's way ahead right now than CCIV, to be honest. But a lot of investors might choose CCIV over NEO in the coming months and probably years. And that could be the next mini Tesla. Could be. But that doesn't take away that NEO has potential. Just NEO needs to go ahead, which is China, not NEO, situate all of this to not get into the delisting concerns and hopefully get the company to expand in America. But the longer it takes, the more market share it's losing to Lucid and to Tesla. And that's where NEO might just do well in China, and it's going to have a cap, right? It's not going to be able to go much higher because it's only doing so much within Europe and just Asian countries and not reaching out here. For investors to get even more bullish, they need to see it everywhere. Think about it. That's how you need to watch this, but you need to start watching it now. Be prepared like a hawk to strike for your opportunity. As always, guys, thank you guys so much for watching. I look forward to seeing your guys' thoughts, and let's make some money.